All right, so an article has just been released by a vendor called stories.com that apparently 45% of variable rate mortgage holders will have to sell in the next 9 months. And in this video, I'm going to be dissecting this article, giving you my opinion on it, and just going over it in general. So stick around. I'm 𝐕𝐈𝐃𝐄𝐒. I talk about Canadian real estate in my local market of Abbotsford in the Fraser Valley. And if you get any value or entertainment from these videos, all that I ask is that you thumbs up, subscribe to my channel, do all of the other things that are going to help me get this content out to more people just like yourself. And hey, if you want to chat about buying or selling real estate, you can do so by scrolling down into the description, clicking on my link I provided for you, and booking yourself right into my calendar for a time that's convenient for you to chat. All right, let's read this article. So 45% of variable rate mortgage holders say they could have to sell in the next 9 months. Variable rate mortgage holders have felt the full force of the interest rate hike cycle, with a staggering 45% of variable rate holders now saying they'll be forced to sell in just under 9 months. And it's not just variable rate mortgage holders who are at risk. The poll revealed that 45% of those with a line of credit on their home say they would have to sell or vacate the property in the next 8.3 months. Owners with fixed rate mortgages appear to feel more confident about their financial situation, but only marginally, with 35% saying they'd be forced to sell or vacate in the next 10.4 months, and 66% saying they can ride the rate hike out for as long as it takes. Just 29% said they haven't experienced much of an impact from rising rates among variable rate holders. 19% said they had to make drastic financial adjustments and lifestyle changes. 29% said they are feeling very serious pressure but are doing what they can to get by. And 38% said they have felt anxiety but it's manageable. For fixed rate holders, the numbers are slightly different, with 11% making drastic financial changes, 25% feeling very serious pressure, and 44% having manageable anxiety. So let's talk about the fixed rate portion of this article first. 35% saying they'd be forced to sell or vacate in the next 10.4 months. Now, I don't really know how this is possible unless the article is being misleading, and I may be wrong in that regard, but it's just my thoughts. If you have gotten a fixed rate mortgage basically any time before the last year, you should have a normal interest rate. So I questioned the questions that they are asking the people in this poll. Are they asking them about current interest rates? Are they just asking them what would happen if they had to renew at current interest rates? Like, are they asking them about their current mortgage, or if they had to renew at the rates today? You know what I mean? Like, are they saying, what would happen if you had to renew at today's interest rates? How long would you last? Or are they just asking them about their current fixed rate mortgage? I don't know. Anyways, let's keep going. As well, there's probably, a decently low percentage or a fraction of the people that actually hold fixed rate mortgages that have come up for renewal in the last year. Depending on sales volumes, this isn't going to be completely accurate, but if we assume everyone's taking a 5-year term, then it'd be safe to assume that 1 in 5 people come up for renewal this year, which is 20%. Obviously, this number could be higher. But not only that, fixed rate mortgages are back down again. They're sitting around 5%. And if you're coming up for renewal this year, you got a fixed rate mortgage 5 years ago at, probably somewhere in the 3s, and you were stress tested at 5.25. So in theory, you should have no problem affording a 5% fixed rate mortgage if you got a mortgage, with a 5.25% stress test rate 5 years ago. I mean, unless you refinanced your mortgage and bought a Corvette, then I would think you're probably going to be fine. So let's talk about the validity of the variable rate mortgage side now. So 45% of variable rate owners say they will have to sell in 9.3 months or whatever it is. Now, I actually don't doubt this, but where this loses validity is they say 45% of variable rate mortgages think that they will have to sell. So this isn't actually what they'll have to do, it's what they think they'll have to do. And it may not be the reality. Like, I think a lot of people think they'll have to sell, but I also think when it really comes down to it, people will sell their cars. They'll pick up an extra shift. They'll stop drinking on the weekdays. They'll start going out to eat. Hell, they might even quit smoking. Like, I think people will do whatever it takes to not have to sell that home, especially if it's in a loss. I would say 9 out of 10 people reaching out to me right now who want a home evaluation and they're thinking about selling their home are selling it in a loss or break-even position. Out of the 20 home evaluations that I've done in the last month, only 2 of them were actually in a profit and in a position to sell. The people who want to sell right now are not in a position to do so. So of these 45% variable rate mortgage holders who think they'll have to sell, how many of them are actually in a position to do so? Because I'm willing to bet that a large portion of these positions are probably in a loss or break even and not truly in a position to sell, because, why would you sell and realize a $100,000, $150,000 loss? You would probably do everything in your absolute power to make sure you hold that home until the market rebounds. And I think most people who are in a profit are not thinking about selling, and they're probably not in pain right now, because they've got, even if their variable rate mortgage came up for renewal or they hit trigger rate or whatever the case may be, they also have a much lower mortgage balance because they probably bought their homes back in 2018 and 2019 and 2017 when home prices were much lower than they are today. So let's talk about some statistics now. First off, just over half of homeowners have a mortgage in Vancouver at 53%. 47% own their home outright with no mortgage at all, which is insane to think about with the prices and how high they are in Vancouver. Of that 53% with mortgages, 70% of them are fixed rate mortgage and 30% of them are variable rate mortgages. Of the 30% of variable rate mortgages, 75% of that 30% are on static variable payments. They're fixed payment variable rate mortgages. The interest rate goes up and down, so the amount of principal you're paying fluctuates, but the payment stays the same. And recently, the Bank of Canada, or somebody, had come out and said that over half of these fixed variable rate mortgages have come up for trigger rate, or have hit trigger rate, sorry. Now, trigger rate is different from lender to lender. Some lenders may ask that you just put up an extra $100 or $200 a month just so you're not in a negative amortization state, so you're actually paying down some principal every month. Some lenders will actually completely readjust your payment to make sure you're on track to pay off that mortgage whenever you said you were going to pay it off in the 25 years or 30-year term, right? For example, like if RBC, I know for a fact, only makes you pay like an extra $200 a month like that. So you're paying down $200 a month principal. So you may be in a state where your amortization takes 57 years to pay off your mortgage if you were to continue to do that for the next 57 years, right? Some lenders will actually readjust your payment completely so you're back on track the original way you took out that mortgage, which means your payment may literally come close to doubling, right? So not all of these mortgages that have hit trigger rate are going to be in trouble. Some of them are just asked to put up a couple $100 extra per month, right? So a certain percentage of those fixed rate mortgages, fixed rate variable rate mortgages that have hit trigger rate are going to be in trouble, but there's also a portion of them that should be fine. And of the remaining 25% of that 30% of mortgages, of the 53%, those guys and gals are definitely feeling some pain because they're on a floating variable rate mortgage, meaning that their monthly payment fluctuates with interest rates. So if we were to break this down, I think it's completely possible that 45% of variable rate mortgage holders think they have to sell. But I'm very skeptical as to the fact that 45% will actually have to sell. As I said before, I think people are much less willing to sell, especially if they're in a loss or break even, and they'll probably do whatever it takes, get another job, cut out expenses, whatever it takes, just hold that property for a year or two until the rates come back down. Now, all that being said, what would happen if even a decently sized portion of that 40% will actually sell their homes in the next 10 months? Well, it doesn't take much to drop the market. They say on average it takes 3 sales to completely reprice a neighborhood. So in that respect, even a little bit of forced selling can do a lot of damage in a market. I'm not willing to bet on what will happen in this case. We're just gonna have to wait and see, but I thought I'd come on here, share those statistics with you, share this article. I think the fixed rate portion of this article is completely bollocks, in my opinion, but the variable rate mortgage side of it is somewhat believable. So if you enjoyed this video, thumbs up, subscribe. We'll see you on the next one. Peace.